Alright, in today's video, I am going to be showing you how to draw a support and resistance level. Support and resistance level are a very important tools that traders use in the Forex market in order to determine the trend, the best way to get into the market, and the best way to get out of the market, right? So whether you are a swing trader, you are a day trader, you are a scalper, it can be very valuable to you. And also depending on the strategy you're using, right? Okay, so before we proceed, I would like to also give a tip of the directions that we have in the Forex market, right? The first one, we have about 4 different directions in the market. The first one is the uptrend, the second one is the downtrend, the third one is the ranging market, or it can also be called a consolidation market. The last one is the chopping market. So the chopping market, for example, are those kind of market direction that you are unable to determine if the market is in an uptrend or a downtrend or a sideways. So basically, when you analyze the market and you are unable to see if this market direction is going to the upside or is going to the downside or is going to the sideways. So those kind of markets are chopping markets. Okay, so before we go to the market, before we go to the chart, I want to show you this drawing, right? This diagram that I am presenting to you right now. So usually when we talk about support and resistance, so we have in mind that the support is always the floor, while the resistance is always the ceiling. An example is what I have here on my chart. Here, this is the support level because the support level is always the floor, right? And the resistance level is always the ceiling. This is what I have here. So basically, for a valid ranging market, this is an example of a ranging market. Everything right here, this is an example of a ranging market. Remember that I said earlier on at the start of this video, I said we have different market direction, which are the uptrend market, downtrend market, sideways market, and the chopping market. And I said that the chopping market are this kind of market that when you analyze the market, you are unable to determine if the market is in an uptrend or a downtrend or a sideways. So those kind of market are to be avoided, right? So here on my chart, I have this ranging market. This is an example of a ranging market. And for a valid ranging market, we need minimum of 2 touches above the resistance and below the support. So here we have the first touch right here, and this is the second one at the resistance. This is the first one at the support, and the second one at the support, right? So we need minimum of 2 touches at the resistance and minimum of 2 touches at the support to make a valid ranging market. Now that we have our 2 minimum touches at the resistance level and at the support level, so the next thing for us to do as a trader is to understand exactly what is happening at the resistance level and at the support level. So basically, what you need to understand is that at the resistance level, there are sellers around those levels who are willing to push price to the downside. Likewise, at the support level, we have the buyers who are always willing to push price to the upside. So the main aim for the sellers is to make price go lower, right? Is to make price depreciate in value. And the main aim for the buyers is to make price go higher for price to appreciate in value, right? So at this resistance level right now, we have sellers who are actively looking for a way to sell the market. So let's assume that this is Euro USD market price. Now we have a ranging market here, and price approach this resistance level, right? So now If there are enough volume in the market, then we are going to see price heading more to the downside, right? Because there are a lot of sellers around this resistance level. And mind you, when there are several touches at a particular level, sometimes this level gets to not hold stronger. So this level gets to not hold stronger because there are several market touches. So in order for us to understand this process very well, so I'll just have to give you guys a brief explanation regarding that. So let's say we have a door right here. So let's take this as a door, and we have this apartment. So let me just draw an example right here. Okay, so we have this apartment right here, and we actually want to go through this apartment. So we want to enter, don't mind us drawing. So we want to go through, want to enter this apartment, but we have a blockage here. So this is what is blocking us to get through to this apartment. So in order to go through this door, this particular door right here, right, we have to use an heavy metal or heavy something, anything that is very, very strong, right, to punch through, right? We could either use our hand, or we could either find something that is much more stronger, right? The whole scenario about this is to actually find a way to enter through this particular door, right? So now we in the process of doing that, we have to use this heavy metal that we found and then throw it at this particular door, right? So the first time you're going to do that process, of course, there might be no difference because this is the first time, right? But after 4 to 5 times that you're throwing a heavy object at it, trust me, if this is a wall actually, then you see that this wall is going to start getting weak, and at some point it's going to just collapse, right? I'm sure you understand this process. So at some point it's going to collapse. So this is the same explanation about the support and resistance. After the market has approached this level, which is the support and resistance level, several times, at some point these levels start getting weak. They won't be able to hold up more price again, right? And like I said earlier, so let me just undo this. So like I said earlier, right, I said at every resistance level we have sellers who are willing to push price to the downside, and at every support level we have buyers who are ready to push price to the upside. So remember that at the beginning of this video I said that we have 4 different type of market direction, and I said that number 1, we have the uptrend market, we have the downtrend market, which is the number 2. Number 3 is the range market or consolidation market, which is what I have just explained to you right now. And the number 4 is the chopping market. So the chopping market are this kind of market, like I said earlier, that they are this kind of market that you are unable to determine if market is going to the upside or is going to the downside. You can't really determine if price is trending or not trending, right? So in order to stay safe in the market, you always want to stay away from this kind of market. I mean, you want to try as much as possible to be able to decipher the trading market from the ones that are not trending, right? And you always need to know that we have different time frames, right? On my chart here, I have the monthly time frame, I have the weekly, I have the daily, I have the 4 hours, the 1 hour, 30 minutes, 15 minutes, and the 5 minutes. All these time frames that you're seeing right here, they are there for a purpose. They are not just there for fancy, they are there for purpose. So when you see a trending market on the monthly time frame, it might be trending to the upside, but by the time you navigate down to the weekly time frame, it might be a different trend, right? And this is why the support and resistance approach is very, very, very powerful when you know how to use it, right? And this is the reason why I am trying to explain everything to you today, right? So by we understanding the support and resistance, it's going to actually help us in so many ways. And I have just explained to you the range in market, because I don't think there's any other direction in the market that is different from these four directions that I've just explained to you right now, which is the uptrend market, the downtrend market, the sideways or the consolidation market, and the chopping market. There is no any other direction that is different from this direction that I've given to you. So whenever we are looking for a support and resistance, we can find them in all of these directions. Okay, all of this direction we can find them. I think on shopping market as well we can also find them, but like I said, you always want to stay away from those kind of markets, right? So this is actually for the ranging market or the consolidation market. So what about the trending market? So we are going to go through the uptrend market and the downtrend market. So what I have here on my chart, this is an example of an uptrend direction. As you can see, the market is moving to the upside. So if you're going to determine if the market is trending to the upside or trending to the downside, or basically trying to understand uptrend and a downtrend, the best way to understand this scenario is to look at the direction. Where is the market heading to? As you can see, this market is actually heading to the upside. You can see. So this automatically becomes an uptrend, right? And the other way around, which is the downtrend, you will see the market heading to the downside. So we are going to touch that one very soon. So let's just complete this for now. So we may actually be wondering, where exactly is our support and resistance? So support and resistance can also be found in a trending market. It's not just a ranging market where we're able to have our support and resistance. It can also be found in a trending market. So like I said, this is an uptrend market, and this support, like we said the other time, the support is usually the floor and the resistance is usually the ceiling. All right, so now as we have already identified the support level being the down one right here, this is the support level, and the resistance level is the one at the top, just like the one for the ranging market. The one above is the resistance and the one below is the support. Same applies to an uptrend market, right? So all these levels that you're seeing right here, these are all support structures. So all these ones right here, these are all support structures. So when you're on a live market, right, you are going to identify all this, and this right here, these are all resistance structures. So you can see, so it's easier to identify these levels on a trending market, right? It's easier to identify all these levels on a trending market, as well as it is easier to also identify them on a ranging market. So once you identify this on a trending market, the support level and the resistance level, so after we've identified the support levels and the resistance level, then this is the best time for us to now start looking for trading opportunities, because this whole scenario right here in an uptrend, we have the impulse right here and the correction. So we have the impulse, the correction, the impulse, the correction, and we also have the impulse and the correction. And you know that after every correction comes an impulse, so we're expecting the market to move to the upside. So once price respect this level, this automatically becomes our support, and we know for sure that this right here, this trend support level, right, is going to hold. But at the same time, we also need to respect the structure. So the previous structure right here is this one. Before price broke above this resistance, this was formerly the previous structure. So right now, we can't really say that this is going to be our support level, even if for a fact that it's actually respecting this trend line, we could actually still have a breakthrough like this, but it doesn't mean a change of trend. The reason why most traders find it difficult is because once they see a breakout of a trend line, automatically they feels like this is going to be a change of trend. No, it is not, right? So you have to wait for a break of a structure before we can identify a particular trend as a change of trend. So for this to be a change of trend, I would wait for a break of this structure and then wait for a retest. So sometimes the retest can go like this or even go more deeper like this, and then a continuation to the downside. So but if trend is not changing, then we are going to see price respecting this level, and then we see price moving to the upside from there. So we're going to have something like this. We're going to have something like this to the upside. All right, so and one of the reasons why we don't really want to trade, based on the breakout is because, most of you guys may be wondering that, okay, once we have a breakout of this level right here, this this support level, once we have a breakout of this support level right here, the market should start selling. Of course not, because we could actually still see price pushing to the upside from there. I mean, this has happened several times, right, in the forex market, where you see price breaking through a trend line, and then you still see price continuing in that same direction, right? So this is the reason why before we can regard a trend that is changing, then we need to wait for a break of the previous structure, right? So in this case now, this is the previous higher low structure. This is the higher high, right? And this is the recent higher low. So you can see that this low right here has not actually broken through this support structure. So we can't really regard this as a change of trend, even if it has broken through this support trend line, right? So let's move down to a downtrend. All right, so what I have here on my chart is an example of a downtrend market, right? You can see that this market is heading towards to the downside, so it is easier to identify that this is actually a downtrend market. So just as we've identified the uptrend market, so this is also a similar example, right? And in this case now, because this is heading towards the downside, it's still pretty much the same thing, right? Because the support level is the floor. Just have this at the mind that the support level is the floor and resistance level is the ceiling. So in this case now, if I am to plot my support level, in this case, I am going to choose the down one right here as the support level. You can see, and then the resistance is always going to be at the top, right? So if price approach the resistance, right, and after price approaching the resistance, it bounces back to the support, and then from the support bounces back to the resistance, from the resistance bounces back to the support. So this is how the resistance and support usually hold. All right, so now that we have our trading market, our downtrend market, so the most important levels right now are this resistance. All these are all structures that we have to pay attention to, because in a downtrend market, the support level must be broken. I'm sure you guys know that the support level right here always has to be broken for the downtrend to continue, right? If the support level is not going to be broken, then this downtrend would not continue in its direction. Okay, you can see that the resistance are being respected, they are not being broken. You can see. So any attempt for the market to break through this resistance, right, it means a change of trend, right? It is not just a breakout of a trend line. That means a change of trend. Okay, sometimes we may have a breakout of a trend line, and then you still see price pushing back through to the in the direction. But we have to wait for a break of this support, this resistance structure. Then we can regard this as a change of trend. You can see something like this. All right, so now that we have this in mind, so let's go back to our main chart. All right, so this right here is an example of an uptrending market, because when you look at the chart, the question you need to ask yourself is, where is the market heading to? So right now you can see that the market is actually heading to the upside. So we can actually say that this is an uptrending market. So this is a good example of an uptrending market. So based on the example we've done before, so how do we identify our support level and our resistance level? So here we can actually use a tool, yeah, which is this right here. We can just use this tool to plot our support level. This is our support level. So let me just extend this down like this. Okay, so this is our support level, and here this is our resistance level right here. So basically you only need minimum of 2 touches of the support level and minimum of 2 touches at the resistance level to make a valid support and resistance. Okay, so the most important levels right now are these structures right here. Okay, this structure, this is a support structure. We can also pick this as our support structure. You can see that all this, because this is an uptrending market, so the support structure are going to be respected, but the resistance level or the resistance structures are going to be broken. You can see this is a typical example of resistance. This is a resistance structure. You can see that the resistance structure was broken, and this is also another example. You can see this also was broken. This was broken to the upside. The reason why that's been broken is because price needs to aim higher. For price to continue trending to the upside, it needs to break through a resistance for price to go higher. Okay, just like this, we have to break through this resistance for price to get to this level, and for price to get to this higher level, it has to break through this resistance level, something like this, and then you see price retracing, and then so this is how an uptrend market is being formed. Okay, so here we also have another resistance level that was also broken. You can see, so when you have this in mind, it gets easier for you to identify the resistance structures and the support structures, because you are going to need this knowledge in your trading whenever you want to analyze the market. This is just a single time frame. This is a 4 hours time frame. If you are to analyze the market from the higher time frame down to the lower time frame, then this is going to be a very important tools for you to understand. All right, so if this video is of value to you, please do us a favor by clicking the subscribe button and turning on your notification bell, so that when we drop a new video, we are going to be doing a lot of videos in the next few days. So if you don't want to miss out on all of this content that we are going to be creating, please do us a favor by clicking on the subscribe button and turning on the notification bell, so that you get notified whenever we create a new video. All right, thank you as you click on the subscribe button. So another thing I want to put your attention to is support level turning to a resistance level, or resistance level turning to a support level. So in this case now, let's say let me give an example right here. So we have an uptrend market. So here we have a new low, a new high, price created a new higher low, a new high, a new higher low, a new high, right? So in this case now, you can see that this is our resistance and this is our support. So sometimes, we can actually bring the resistance level and then drag it like this to the next point right here. You can see that, yeah, we have our previous resistance. This is the previous resistance, which is now a support level. You can see. So this is usually very strong, because when price creates a new, this is more like a retest. When we have a broken structure right here, this is the breakout, and then price created a new II, and then comes back down to retest this broken structure and then push to the upside again. So you can see this happens several times in the market. You can see this is also an example. Sometimes you can see this is a resistance, and this is a new high. You can see how price pushed through this this previous structure right here. It's actually a normal thing, right? Sometimes price may not actually respect this structure, and then you see price pushing through. And this is the reason why, if you are in our channel, right, you will notice that anytime we always analyze the market, we are always waiting for a pullback. Okay, this is an example of a pullback. You can see this is an example of a pullback. All this right here, these are all pullbacks. Okay, these are all pullbacks. And we also have a minimum requirement for a pullback. So sometimes when you have an impulse like this, so we need to have a minimum of 3 waves. This is actually the minimum anyway. So we need a minimum of 3 wave pullback for we to see that this pullback is valid. Because if we have only 1 wave pullback, something like this, then it's not valid. Okay, it's not valid. So we need minimum of 3 wave. So sometimes it may extend to 4 to 5 to 6 wave. It doesn't really matter, but the minimum is 3. So sometimes when you see price coming down to retest, so let's say we have something like this. Now we were expecting the price to actually turn around from here, but this is not the moment where we are going to be taking out a trade, because this correction is still very much active. So we can't actually take any trade in this scenario. So sometimes you could see price continue like this. So once we have a break of structure like this, then it's a confirmation that this pullback right here has actually ended. So we can now resume back to the next impulsive phase, because this is the next impulse. You can see it is an impulse. This is a correction. So after every correction, we are going to have an impulse, right? So this is an impulse. You can see it is an impulsive phase. So a breakout of this previous structure will give us a good confirmation that the impulsive move is about to begin, and this is where the big money is. So this is what traders need to be anticipating. All right, so I hope this explanation was very understandable. And if you're not on our Telegram channel, the link is going to be in the description for you to join our Telegram channel, so that any of our analysis, any of our updates, you're going to be getting them on time. Okay, so let me clear all this. All right, so this is the example I was trying to bring out to you. You can see that here we have the previous resistance right here, and when we extend this to the left right here, I mean to the right here, you can see that it is now a support level. You can see, so resistance levels now turns to a support. Okay, so this is a similar example of what I was explaining to you the other time. So you can see that here we have a pullback. Okay, this is a pullback. So we can also call it a correction. So this is also a correction. Okay, so you can see that every correction must always give a minimum of 3 waves. This is our wave 1, wave 2, wave 3, wave 4, wave 5. Okay, we can say this is wave 6 and wave 7. Okay, but if you look at it now, this is actually a break of the structure, and I wouldn't mind taking my trade from here. You can see at the break of the structure, price that are moving to the upside. This is also our wave 1, wave 2, wave 3, wave 4, and wave 5. This is the structure breakout. You can see a breakout of this level also confirmed that the impulse is about to begin, and of which it did. Okay, so this is a good confirmation, right? And this is because we've understood the fact that support and resistance level is very, very, very important. All right, so let's go back to the next one, which is the downtrend market. All right, so this is an example of a downtrend market, and as you can see, price is actually heading towards to the downside, giving us a combination of the lower highs and lower lows. That is actually how to the characteristics of a downtrend. We are going to be having lower highs and lower lows. For an uptrend, we will be having the higher highs and the higher lows. So right now, so to identify the support level, as we said the other time, that the support level is actually the floor and the resistance is the ceiling. So right now the support level is going to be the one below, which is this level right here. So this is the support level, and the resistance level right now is going to be the one at the top. So this is the resistance. So like I said, for a valid support and resistance, we need minimum of 2 touches, right? Here we already have first touch right here for the resistance, and this is the second touch right here for the resistance as well. And for the support, we have this first one right here and the second one right here. Okay, so we need minimum of 2 touches to make a valid support and resistance level. Okay, so now the most important aspect of this support and resistance is marking out the structures, right? So in order to mark out the structures, I will need to use these tools. This is our resistance structure. This is also our resistance structure, as you can see, and this is also our resistance structure. And for the support, this is the support structure, and we also have another support structure right here, another support structure right here, as you can see. So now, like I said, for an uptrend, we treated the uptrend scenario recently, and we said that the uptrend, the resistance is always going to be broken. So you can see the resistance is always being broken for the uptrend to continue. This is an example. You can see this uptrend, the resistance got broken. This is another resistance which also got broken. Another one right here also got broken, right? So the resistance level are always broken while the support level is going to be respected. You can see these are all support level that are respected. They must not be broken, right? So now that is for uptrend, but in this scenario right now, this example right now, this is a downtrend. So it's going to be a different case. So right now you can see that the resistance, they are always being respected. You can see they are always being respected. In this case now, this is the support level. You can see it was broken. For the downtrend to continue, this support level also was broken for the downtrend to continue, and this support level was also broken for the downtrend to continue. But you can see in this case right now, this is the previous lower high, this is lower high, this is lower low, this is lower high, this is lower low, this is lower high, this is lower low, right? The reason why, okay, just give a second, let me undo all this. All right, so the reason why this is higher, this is high, right, is because it's at the top. And the reason why this is lower high is because it's at the top and it is lower to this. It's lower to this this previous one right here. The reason why this is called lower high is because it is higher, but it is also lower to this. The reason why we want to call this low is because it's at the support level. And the reason why we call it lower is at the support level and at the same time it's lower this to this. Okay, so you can see this is what we call the lower highs and lower lows, right? For an uptrend is what we call higher highs and higher lows. So now in this case now, you can see this is the previous high. This is the previous high. And like I said earlier, that the resistance is always to be respected only if the market wants to change direction. Okay, And as you can see in this case now, we have our resistance level, and here it was broken. Now this is the point where traders like myself and yourself need to now check the market for more opportunities, because this is giving us a potential opportunity for price to change direction from a downtrend to an uptrend. Okay, so if we look at this now, you can see that price started changing direction. Before we had this price, this is our previous high, this is our previous low, right? This is the impulse, right? And initially this was meant to be a correction to the upside, and we're actually meant to have around the impulse to the downside. But unfortunately, since we already had a break of this structure, so now the old downtrend scenario has already ended, and now we shifted from a downtrend to an uptrend. So now we are having this as our previous low. So this is the impulse, this is the correction, the impulse correction. You can see that subsequently price started changing direction to the upside. So you can see how price shifted from a downtrend market to an uptrend market. Okay, so all this, right, is we understanding support and resistance. And if we extend this level, so if we extend this level to the right side, you can see that the previous resistance, this is the previous resistance, is now a support level. You can see, so this support level is now very strong. This is actually what we call market structure. So when we find something like this, where the previous resistance is now support, or where the previous support is now resistance, these levels are very, 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 very strong. And as you can see, if I also extend this down like this, you can see that it's actually a very perfect level. You can see we also add this level right here also. Okay, previous support. Now we had a breakout, price made a new low, then a retest, which is the resistance, and then price dropped. But unfortunately we had a breakout and then price retested. You can see, so this is the point where when we have this on our chart, we've been able to spot out all those things, then it gives a very high odds of winning, right? It increases our chances of winning that particular trade. Okay, so now let's head down to the ranging market or the consolidation market. Okay, so now this is an example of a ranging market, right? So a ranging market is a sideways market, or we can also call it consolidation market, that move on a straight line, right? So an example, it was what I did earlier for you guys at the start of this video, that when we have something like this, price moving between two levels at equal highs and equal lows. So this is an example. So also we need minimum of 2 touches for also validate the authenticity of this consolidation market, right? So as you can see, we have our resistance, which is always at the top right here, and at the same time our support, which is always at the bottom right here. You can see. So this is an example. So usually when we are dealing with a consolidation market cannot consolidate for a long period of time. I mean, it can't consolidate for it depends on the time frame you actually spotted the consolidation market from. Okay, if this is actually on the 4 hours time frame or the 1 hour time frame, then probably it may actually last for some period of time, but at some point it's going to actually break out of the structure, either to the upside or to the downside. So for example, if we are the breakout to the upside, then we are going to have something like this, a retest and then continuation to the upside. And if price breaks to the downside, something like this, we are going to have a retest and then continuation to the downside. So usually when we are dealing with a ranging market, we always want to see where the breakouts will head to, either to the upside or to the downside. So like I said earlier, we need minimum of 2 touches in a consolidation market. So right here we have our resistance level right here. So I'm going to just draw the resistance, and then here we are going to have the support level. Okay, so we already have our 2 touches already. So here we have the first touch of the resistance, first touch of the support, second touch of the resistance, and then second touch of the support level. Okay, you can see our price went back to the top to create a new high of the resistance and then push back to the downside. And one thing, you know, many traders do is that once price gets to the resistance, they start selling immediately. You have to wait for confirmation because we are not sure if price is going to continue in this direction, or probably price is just going to break through a retest and then continuation. So we always have to wait for a confirmation before we actually place a trade. All right, so now that we've been able to draw our resistance structure and the support structure on this consolidation market, so depending on the time frame which you identify the consolidation, if you identify a ranging market on 1 hour time frame, then it's always best to wait for a breakout of the structure, either to the upside or to the downside, because 1 hour time frame is a lower time frame, or is a small time frame. So trying to trade between the support and resistance of those consolidation can be very risky. So you just have to wait for a breakout. But in this case right now, this is a daily time frame structure, so we can actually look for a trading opportunities within this ranging market. So if you look at this scenario right now, price shifted from this resistance to the support level, and from this support level back to the resistance level. So all these things are creating opportunities for traders to jump into a trade. Now, before we assume that, okay, if price comes back to this resistance, right? So there are two things that could actually come out, which is price coming back to this level, to this support level. And if price is going to come back to that support level, then it's going to give us some confirmation, right? And part of the confirmation that we actually watch out for is that if you look at this trend to the upside, right, you will notice that we actually had a little bit of an uptrend, which is this impulse and the correction, this impulse and correction, and this impulse, right? So we could not actually break through because this resistance level was very strong, so price could not actually break through. So if you can see clearly that here, this is a structural level, you can see this is a structural level, this is support, and you know, in an uptrend, a support level must not be broken, it has to be respected, while you know, the resistance is always needed to be broken. So in this case now, we had the support level being broken. This is it right here, and this may be visible on 4 hours time frame. So if you're unable to see those levels clearly on daily, we can actually shift down to the 4 hours time frame. But if you can see right now that here we had a breakout, this is the breakout of this support structure right here. So we can actually, this is a good confirmation that price is likely to come back down to the support level. And if you look at this support level also, you can see this push to the downside. Okay, so if price had approached this support level, if you look at this, the trend, we had this impulse and this correction, and price made another impulse. So this whole thing right here actually created a simple double bottom formation. You can see this is actually a double bottom formation. So I think I'll be very patient to wait for a breakout of the structure before placing the buy. Okay, so of course we had the breakouts and then price actually shifted to the upside. Okay, the reason why I would have to wait is because we could actually still see price pushing to the upside and then breaking through to the downside again. So we always want to stay safe in the forex market, so to avoid unnecessary losses. So if you can see, we are actually at a break of this support level. Like I said earlier, that we always want to find where the market is going to break through, either to the upside or to the downside. But in this case now, price actually decided to break through to the downside. You can see all those levels were very strong. This was also very strong until this particular point, right? This particular point where price actually broke through the support level. So this actually confirms that the old consolidation market that we're previously in has now already ended. Now we are already in a downtrend. As you can see, price is now giving us an impulsive move, a correction, impulse, correction, impulse, correction, and impulse, right? So this is actually how you can identify support and resistance. It's actually cut across all direction of the market, either uptrend market, downtrend market, sideways market, and even choppy market. But just like I said earlier, we always want to stay away from any form of choppy market because they can actually deceive traders to trading in the opposite direction of the market, right? So we always want to trade in line with the market direction, right? So it's always best to stay safe. So all right, we have come to the end of this video. If this video was very helpful to you, if you gain a lot on this video, kindly give us a like, subscribe to our YouTube channel for more videos, and I'll see you next time.